Hey, Jack from Alpha Charts with a stocks to watch video. Today is December 3rd, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. If you like these types of videos, make sure you go ahead and like and subscribe onto my YouTube channel. That does help me out quite a bit. You can also find me on X at AlphaCharts365 right there. And if you really like my stuff and want more in-depth analysis, I do offer a subscriber group. Again, I give in-depth market reports, watch lists, focus list videos, midweek videos, midweek market notes, also weekend market notes, annotated chart setups, daily market scans, again, posts just for subscribers, chart requests for subscribers, direct access, and all kinds of bonus content that I give just to my subscriber group. Again, I do all this for only $10 per month. That's less than a Chipotle meal at this point, right? So super, super affordable for everybody to get a lot more research, and I hope that it's been helping my members to make more money, right? That's the whole point of this. So if you're interested in this, it's $10 a month. Check it out on x.com. There's a post up there, and there'll be in the description below, there'll be a link as well. Okay, thank you very much on that. Let's get into the charts. So here's the SPY, and we are back in this, again, potential resistance area, right? Let's call it what it is. But the bigger pattern is very favorable, very bullish. So we'll see if we get maybe a little pullback or sideways consolidation coming into this week. It's very possible, not guaranteed. And again, it may be, especially on the cap weighted stuff, that the mega caps are getting consolidated, while underneath the surface, the small and mid caps start to outperform. That's a possibility. So I got about a dozen names. Some of them are very actionable. Some of them are names that are just on my watch list, right? You have to decide what you want to do. Yeah, for subscribers, I give about 25 or 30 names. Again, a much more in-depth video, just like this one, but just more robust and about 45 minutes. It's a longer video, as well as a focus list video, which is short and just my best 5 or 6 names that I like this week. All right, so that's the difference between this video and what I do for subscribers. But let's get into some of these names. First one is Affirm. So this actually was on, and again, you see an example of what I give to subscribers. This was an annotated chart that that I talked about on 11/26, stated for subscribers, and what I was seeing in this chart. And it was actually an amazing one. Some subscribers took this trade and made a lot of money this week on it, and congrats to them. It's coming into an overhead supply area. I'd want to be selling into this area, but doesn't mean that this is over. It could just be a bigger base. So potentially, maybe some sort of pullback, letting moving averages catch up, and then the breakout right there. So that's what I'm looking for in Affirm. Again, it's a very hot stock right now, but again, I want to be selling into this $39, $40 area, as opposed to buying into it and then looking for the pullback. Next up is IOT, another one that had a giant gap on Friday, 25%, monster volume, the most in a very long time, since June, and this month to gap up, right? So now we have a couple monster gappers in this name. And even more significantly, it gapped to all-time highs. So it beat out this IPO high, which was resistance, and it just rammed right through it. Very, very bullish price action. For this one, again, super extended. Can't lie. And again, it may go higher. I'd want to wait for the pullback, or a couple inside days would be fine, and then look for it to move higher here. The other alternative, if it just starts to run on Monday, is you could buy on the break of the high, which is 34, we'll call it at 34.75, right? You could put a buy stop at 34.75, and I would put my stop at VWAP. So that's about 4 or 5%, about 5% or so below. And that's where I would consider putting my stop at the VWAP from anchored from the gap up. And it's a way to manage risk, right? If you think that if this is going to start running higher, a la Affirm, right? So those are two ways that this name could be played, IoT. Looking at snow. Here is snow, and again, a nice big base. A lot of these names have bases that look very similar to this. Love that the 50 is about to cross the 200, and 200 is slightly rising, not by much, but slightly. Pullback was let me rephrase this. Sellers were found as it tried to pull back. It is under the VWAP from the gap, so it's got to retake that VWAP for me. So above VWAP, I think that's a place to get long. And I would put my stop probably under the, probably this day, right under that day. So the low was about 180-ish or so. I probably put my stop, right? And so it's a very manageable trade at that point, right? Even though it's kind of extended, it's a way to get into an extended name. Again, you may want to consider a half or quarter position. You don't have to buy like, an entire position every time, right? So you may want to start smaller, and then as it proves itself, you can always add on the breakout. DKNG, DraftKings. This is a name that me and subscribers have been in the past. You can see there was, I have notes and annotations and stuff like that for the subscribers. And we got in it, and we actually took profits into this area, right, where we thought that there could be some supply, and lo and behold, there was some supply. That's what we expected. But now things are starting to look good again. So I don't mind selling into supply. Then a brand new trade could emerge if it can break above this, 39 and a quarter, somewhere around there. If it breaks above there, then I'm going to consider potentially a new entry into DraftKings, right? So not doing anything wrong yet. And where would I put my stop? So if I was to buy, I may buy a smaller position, and I could use my stop down here at the rising 23-day EMA. That would be, again, for a half or quarter position because it's a larger risk. Or I can use it the low of this day, right? So I would consider it around $37, right? So in that case, it's roughly 5%. And that's a little bit more of a manageable risk area for a slightly normal position size. So DraftKings looks pretty good, like the consolidation that's happening, kind of tight in here. So that all looks nice. GitLab, GTLB, has that kind of, you could say it's an inverse head and shoulder-ish pattern, right? It's kind of built out. It's nice and symmetrical. I like that. Nice day, up 8%. But the true breakout, like, you didn't miss anything if you didn't get this 8%. That just gave you some information off of earnings. Oh, actually, earnings is tomorrow. Oh, earnings is tomorrow. So let's see what earnings does, right? But break above 54.50-ish, and I think we could be along GitLab. Next up is Net. This is Cloudflare. Again, this was has this nice base, and you could actually pull this all the way here and see how the polarity is beautiful, right? How it was support here, became resistance, and now it's trying to break out, and maybe this area becomes support again. So again, any further move higher above, we'll call it 79-ish, and I think that's a place to manage risk, right? And then, I could easily put a VWAP right there, and I could use VWAP anchored from this gap higher as my stop. I think that's a very reasonable stop until the 23 overtakes it, which probably will be in a few days or so. But Cloudflare looks really, really good. What else? Datadog. Here's Datadog. Again, many of them have these similar type patterns. Just a kind of an ugly inverse head and shoulders type patterns, right? That's what I would call this. Ugly inverse head and shoulder pattern back up to the scene of the crime. Again, a little extended. This one may need to, kind of come back a little bit, let moving averages catch up, and then, maybe, break out. So if it does do that, and, this 110-ish, 111, 112, whatever, starts to show that buyers are showing up, you would start a little position there and add as it continues to break out. And this way, risk, again, is very manageable. That's something that we always talk about with my subscribers, is risk. we want to make sure we protect our accounts first and make money second. That's my mindset. That's always what I'm going to be like, right? Protect the account, make money, because there always will be an opportunity to make money. That's always going to be there. If you lose your account, then you can't make any money. So, and that comes from experience of, having nasty drawdowns in the past, right? So we learn through pain. Anyway, Dash, again, has that kind of rounding bottom. This was, another one of those, let me just kind of pull this across-ish, this general area, right? And now has, again, whether you want to call this inverse head and shoulders, more like a cup and handle-ish, it broke out. It's above the area, like that it was up on Friday. Again, still in this general range. So I'm not saying it's ready to just take off quite yet. But if it breaks above, 96, 96, we'll call it $97, we can manage risk against that area. Again, I'd probably go to VWAP from the gap, this big gap up, that until the 23 overtakes it, and then use the 23 to trail my stop. That's just the way I would do it. Next up, FLNC, another giant gapper. I don't know if this one's ready yet either. I think it needs a little more consolidation. That's where I want to be, at least. I want to buy. I want to wait for it maybe to consolidate. Everything so far is in between or inside the gap day. So that is super bullish. There's a bullish consolidation. Some people may even call this, some sort of flag that's happening, which is absolutely fine with me. Again, I would love to see it, just consolidate a few more days. But if it does take off, you can always play, like I've said with the other ones, a break of the flag and then using VWAP, as your stop, just under VWAP from the gap. What else do we have here? SYM. You see where my mind is. I'm looking for these big gappers. Now this one has gone through some consolidation. I'm not saying, it's ready yet, but again, if it does break this purplish area, that would be very nice. It does, again, me personally, I'd rather have another day or two of consolidation, maybe an inside day and then a breakout or something like that, just to tighten up just a little bit. It's not terrible. Everything looks good here, right? And you can see how this is kind of flag E, right? Flag E right there, and kind of like right there. There's your little flag. So a break of it, I could definitely see how that would be a place where you may want to get involved. Again, smaller position size, because you just don't know, right? You don't know, and you don't want to get caught in some of these moves that can be, quite volatile. So again, manage risk. Again, I would do versus, for me, the low of the day. That's just me. That's a bigger risk. So you may want to, again, have a smaller position size if that's the way you're going to play it. BRZE, this is a name that we've talked about in the past. This was one that me and my subscribers have talked about many times on the breakout of this little flaggy area here. And then the little stop, this little alert, I put it right there. And it's just been marching higher, right? Great accumulation volume. How do you get a name like this? I think a touch of the 9-day EMA. That's really the way I'd have to play this. Any touch of the 9-day, I think, would be a reason to get involved. And you can see how the 23-day is, very, very close by. So that would be perfect, I think. So maybe some sideways movement, 9-day catches up, and then that's enter as on a touch. So that's BRZE. And the last one is TMDX. This is Transmedics. Giant gapper right there, right? Up 51%. And you see how it came back. This actually would have been the ideal entry right here, right? That's my ideal entry. But if not, you can then play it again. It's making a little flag right now, nice little inside day, a break higher from the inside day. That's a place to get long, right? And then you could use things like the 200-day moving average as your stop, right? That would be absolutely fine. What is that? That's 7-8%. So that'd be a partial position, right? You use a 9 days your stop, that'd be 6%. That's a little bit better on the risk scale. So you have to define how you want to take care of your risk. Again, it may consolidate another day. Maybe it touches the 9 day like it did here one more time. Right. So then you could let things kind of catch up a little bit more, and things are still above the 200 day, which is flat, which I don't love, but it is what it is. But again, that's how I would play this, right? I think a break higher from here, that'd be get long, or if it consolidates and touches the 9 day, that's another place to get long, right? And if it just flags, then a break of the flag. That's it. So that's the video for today. 12 names. I think some of them are actionable. Some of them, there's just setups. They're setups. And if they hit, take them. If they don't hit, you just watch them. That's the way it goes. If you like this kind of stuff, again, I do a lot more, much more in depth. I go into a lot of market stuff all throughout the week. For my subscribers, really consider joining there. It's only $10 a month. You don't like it, you can always cancel, right? I mean, there's no contract or nothing like that. So give it a try. All right. Y'all have a great day. Take care. Bye-bye.